Your entire net worth could disappear with a single server outage. Every dollar in your bank account, every investment in your portfolio, every asset you think you own exists only as ones and zeros on a screen. And if you think that sounds paranoid, let me show you what happened when people found out their wealth was just numbers that could be erased. Let me take you back to Cyprus in 2013. People woke up one morning, went to the ATM to get cash, and the machines were turned off. The banks were closed, not for a day or two, but for weeks. And when they finally reopened, anyone with more than 100,000 euros in their account found that a chunk of it was just gone. The government had taken it, converted deposits into worthless bank shares to bail out failing banks. People thought they had money. They could see it in their account balance online. But when they actually needed it, they discovered it wasn't really theirs. It was just a number on a screen that could be changed by someone else. Now, go back further to the 1930s, during the Great Depression. People lined up outside banks desperate to withdraw their savings. But here's what they discovered. The money wasn't actually there. Banks had loaned it out, invested it, used it for other purposes. The system worked on trust and the assumption that not everyone would want their money at the same time. When that trust broke, when everyone showed up at once, the truth became clear. Most people's wealth was just a promise, an IOU, numbers in a ledger that couldn't be converted into actual cash. Or look at what happened in Argentina multiple times over the past few decades. The government would freeze bank accounts, limit withdrawals, or convert deposits from dollars to devalued pesos overnight. People went to bed with $10,000 in their account and woke up to find it had been forcibly converted to pesos worth maybe $3,000. Their wealth evaporated not because they spent it or lost it, but because someone changed the numbers. So what's happening right now in 2026? We've taken this problem and amplified it to a level that's actually insane when you think about it. At least in the 1930s, your wealth was backed by something physical, gold, silver, paper currency you could hold. Today, we've gone fully digital. Your paycheck gets deposited electronically. Your bills get paid with digital transfers. Your investments exist as entries in a database. You probably couldn't tell me the last time you actually held more than a couple $100s in physical cash. And here's the kicker. The stock market, where trillions of dollars of wealth supposedly exists, is really just a giant scoreboard. When you see that your portfolio is worth $50,000, that's not saying you have $50,000. That's saying if you try to sell your shares right now at the current price, you'd get roughly $50,000. But if everyone tried to sell at the same time, those prices would collapse. The wealth would vanish because it was never really there in the first place. It was just a collective agreement about what something might be worth. Think about crypto for a second. At the peak, people had billions, some had hundreds of billions in crypto wealth on their screens. Then the market crashed and 70% of that wealth just disappeared. Where did it go? Nowhere. It never existed in the first place except as a number on an app. It was a shared hallucination about value. And when people stopped believing in it, the number went down. But this isn't just about crypto or stocks. Your regular bank account works the same way. You think you have $5,000 in checking, but the bank doesn't have $5,000 in cash sitting in a vault with your name on it. They've loaned most of it out. They're keeping maybe 10% in reserve. If that, the whole system runs on the assumption that you're not going to ask for all your money at once. And as long as everyone believes that, it works fine, but it's fragile. Here's what makes 2026 different from any other time in history. We're more dependent on digital systems than ever before, but those systems are more vulnerable than most people realize. A major cyber attack could lock you out of your accounts for days or weeks. A bank failure could freeze your funds while regulators figure things out. A glitch in the payment system could mean your cards don't work. And all of this has happened in various places around the world recently. It's not theoretical. Let me break down why this matters in simple terms. Wealth used to be tangible. If you owned land, you had land. If you had gold coins, you had gold. If you had cash, you had paper you could physically hold. The wealth existed independent of any system or institution. But modern wealth is different. It's a claim on value, not the value itself. You have a number in a database that says you're entitled to something, but whether you can actually access that something depends on systems, institutions, and infrastructure working properly. And those systems are controlled by other people. Your bank can freeze your account. The government can impose capital controls. A payment processor can deny your transactions. A brokerage can restrict what you can buy or sell. We saw this happen with certain stocks a few years back. Your wealth, which you think is yours, is actually subject to the decisions and rules of institutions you have no control over. Now add in the fact that most wealth today is leveraged, meaning it's built on borrowed money. When you buy a house with a mortgage, you've got maybe 20% actual equity and 80% debt. When companies buy back their own stock using borrowed money, they're creating paper wealth built on leverage. When the whole system is interconnected through debt and derivatives, a failure in one part can cascade through everything. The 2008 financial crisis showed us exactly this. Numbers on screen started going down, and suddenly trillions of dollars in wealth vanished in months. Here's the part that should keep you up at night. We built an entire civilization on top of digital promises. Your retirement account is numbers on a screen. Your home equity is a theoretical value that depends on what someone else might pay. Your investments are claims on future earnings that may or may not materialize. And all of it depends on continued faith in the system. As long as everyone believes the numbers mean something, they do. But belief is fragile. We saw a glimpse of this fragility in 2022 and 2023 when several major banks failed. People's deposits were at risk until the government stepped in. We saw when FTX collapsed and billions in crypto vanished overnight because it turned out the numbers on people's screens didn't correspond to actual assets. We see it every time there's a market crash and trillions in paper wealth evaporate in days. The weird thing is that this system works most of the time. You can swipe your card and buy things. You can transfer money instantly. You can check your balance on your phone. It feels real because it functions like it's real. But it's built on layers of abstraction that separate you from actual tangible value. And the more layers there are, the more potential points of failure exist. This doesn't mean the system is about to collapse tomorrow or that you should panic. What it means is understanding the nature of modern wealth. It's not that your money isn't real. It's that it's real only within the context of functioning institutions and systems. It exists because of collective agreement and trust.